investors are slowly resuming activity after the Easter holiday. It has been a quiet trading these days as many major markets were closed for the Easter holiday that is traditionally accompanied by thin trading conditions and low liquidity. Major financial markets in Europe were closed for Easter Monday, as were markets in Australia and Hong Kong. In Asia, shares slipped, pulled lower by underperforming Chinese stocks that retreated from a 13-month high. Comments from our top policy-making bodies raised investor fears that Beijing will slow the pace of policy easing after some signs of stabilization in China. The Shanghai Composite Index closed down 1.7%, and Japan's Nikkei edged up 0.08%. During the early trading on Monday, Brent spiked on a report that the U.S. is likely to ask all importers of Iranian oil to end their purchases or face sanctions. Brent futures rallied to a 5-month high after the Washington Post said U.S. Secretary of State Mike Pompeo will announce that as of May 2nd, the State Department will no longer grant sanctions waivers to any country that is currently importing Iranian crude or condensate. The prices extended gains later in the day and refreshed highs marginally below the $74 level after the U.S. declared to end the waivers for countries to import Iranian oil as a part of a bid by the Trump administration to push Iran's exports to zero. Fear reemerged that another drop in Iranian exports would further squeeze supply in a market already tightened through the U.S. sanctions against Iran and fellow OPEC member Venezuela, plus voluntary cuts led by the Organization of the Petroleum Exporting Countries. Interestingly, the gains for oil came despite a tweet from U.S. President Donald Trump that looked to reassure the markets that Saudi Arabia and other OPEC members will, quote-unquote, more than make up the oil flow difference in our full sanctions on Iranian oil. Meanwhile, Baker Hughes on Thursday reported that the number of active U.S. rigs drilling for oil fell by 8 to 825 this week. That followed increases in each of the previous 2 weeks. Rig data were released a day earlier than usual because the markets were closed on Good Friday. U.S. stocks struggled to maintain a foothold in positive territory as investors face a big week for corporate quarterly results and economic data following an extended holiday weekend. The Dow Jones Industrial Average fell 53 points, or 0.2%, to 26,506, while the S&P 500 index was flat at 2,905, and the Nasdaq Composite Index gained 7 points to 8,005. Shares of Boeing Co. shed 1% to weigh on the Dow after charges of lax safety tied to the production of the aircraft maker's 787 Dreamliner. Shares of Tesla Inc. fell 3.6%. The electric car company is reportedly investigating a video from Shanghai that appeared to show a parked Tesla auto catching fire. On the data front, the Chicago Fed National Activity Index rose to negative 0.15 in March from a negative 0.31 in February. Existing homes were sold at a seasonally adjusted annual rate of 5.21 million in March, 4.9% lower than February's pace, and missed the consensus of a 5.3 million rate. The dollar was mixed on Monday, with the euro-US dollar pair managing to extend the pullback from lows reached last week. The prices rose to 1.1260 during the thin trading amid a muted dollar demand. Despite the correction higher, the euro failed to attract a sustainable bullish pressure as traders are slowly resuming activity after an extended Easter holiday. Technically, the pair needs to extend the corrective advance above 1.1280 in order to target the 1.13 barrier again. As long as the common currency remains below this threshold, the bearish risks persist. In commodities, the gold prices attracted sellers on recovery attempts that turned a bit lower on the day. There had been a bit of safe haven demand for the yellow metal and overseas trading on news that the U.S. will not grant new waivers for countries that want to import Iranian oil. However, as the U.S. stock market was just slightly lower and the U.S. dollar index was modestly down on the day, the bullion failed to attract a more robust demand. On Monday, the gold failed to get back above the $1,280 barrier and corrected lower, following a modest rise late last week. Only above the 200 DMA around $1,290, the immediate downside pressure will ease somehow. That is all for today. Thank you so much for watching, and please click subscribe to always be in touch with the latest market news.